We're going to go over the valuations according to my high five snapshot. We're going to look at some charts, and we're going to quickly give a brief overview. Buckle up and let's get into it. This stock is one of the best risk to reward ratios in the entire market. They are priced as if everything is about to go completely wrong for the business and more. And if just some things don't go wrong for the business, if they're able to deflect or able to delay or maneuver this market, then they are going to absolutely skyrocket. I am not joking when I am saying that this stock could 15, 20, 30x from where it is right here, right now. And that stock, again, is OSCR. So I've already made a deep analysis on OSCR. I'll link the video above on why this company is so great, why the risk reward is so great, walking through my high five snapshot analysis, walking through the charts. I've been constantly posting it on X. If you don't follow me on X, it's at the RonnieV show. We're almost at 10,000 followers. I don't know what we're going to do yet when we hit 10,000 followers. It's a huge milestone. Definitely going to be giving some maybe probably free memberships away in the high five community. Give some free memberships away in that. I'm thinking about maybe a tattoo, a high five tattoo. There's so many different things we can do. Go ahead and drop a comment at what you think we should do when we hit 10,000 followers on X. We just actually hit 1,000 subscribers here on YouTube as well, which is a huge milestone and something that I did not think we'd be able to achieve so fast. So thank you first and foremost to everybody before we get in the rest of this video. Thank you, thank you, thank you. I really appreciate all the love and the support. You guys are amazing. You guys continue to drive me to do better, to put out more content, to really help you in achieving all your financial goals. So OSCR, I pretty much have already talked about this one very much in depth, but to give you a quick overlay of who they are and what they're doing. If you know about Hims, you know Hims is disrupting CVS, Walgreens. They're disrupting those sectors in the healthcare sector, in the pharmaceutical sector, right? So OSCR is doing the same thing, but they're doing it in the healthcare insurance sector. So healthcare insurance companies like UNH, they're dinosaurs. How they do things is very old school, and the fact that UNH, United Healthcare, has been getting so much grief and has been, just in the dog pound for the past couple months, ever since their CEO was assassinated. They've just been absolutely, losing clients to people like OSCR. OSCR is what Hims is to the pharmaceutical side of things. They're very, they're newer, they're more hip, I would say. They're more geared towards millennials and younger generations. They use AI, and they really are bringing healthcare insurance into 2025 and making this a company that could really continue to grow and thrive in this environment that we were seeing, and continue to innovate and improve healthcare insurance. So their whole long-term strategy is guided by 4 strategic objectives, as you can see here on the chart: market-leading, sustainable, scalable operations, build on our superior member experience, harness our technology to power others, and innovate market offerings to expand the individual market. We already walked through our high five snapshot. We'll get into that in a minute. Their fourth quarter and full year 2024 results, and they gave 2025 outlook. It was all phenomenal. Total revenue of $9.2 billion, and they're only a $4 or $5 billion company, so they're way outpacing their revenue. A 56.5% increase year over year. Everywhere you look, all the numbers, they just continue to smash it and just destroy the game. OpenAI and OSCR teamed up. Talked about some charts there. Talked about the risks in this. And again, if you want to go check this out, definitely go give this a read, or check that video that I talked about earlier, going over my thesis. let's get into what really matters, a high five snapshot. And I have an intrinsic value or fair value of $87 for Oscar Health, $15.42 as of right now. They did shoot up to over $17 after earnings. They've come back since then, and I think it's a great buying opportunity. They've basically filled the gap, and I believe that they're going to start their next ascent up and higher very, very soon. I think it's not long before we see this name over $20, as long as things in the market continue to be copacetic. If things in the market get awry and we see a big pullback or something in the markets, then obviously this one could take a hit with the rest of the market. Under $4 billion market cap, just insane free cash flow yield of 24%, forward free cash flow yield 11%. Current PE is 154, which is crazy high. But if you look at the forward PE, which I love to do, they're at a 20 forward PE and a PEG ratio of 0.23, which is so significantly under 1. Very conservative revenue growth here, very conservative EPS growth rate, and you can just see that we easily have a massive margin of safety of 82% from where the current price is, and that's being very, very conservative on all numbers. And you see that we just have a massive amount of upside in this name while being very conservative and while not going crazy on the numbers. A lot of these numbers are less than what they're doing now just to be conservative. But yeah, absolutely crazy. If we get into the charts here, we can see that Oscar has formed this beautiful cup and handle. They are currently finishing out this handle part of the area, right? They have this massive volume shelf. The high five indicator is red, but it is starting to stall out. We're starting to see this handle form, and we're starting to see things curl up. Not just that, but the last time we were at the green barrier on the Williams percentage range, as you see here, we did bounce, and we are trekking upwards. And if we were able to pass over -50 on the monthly, then you better buckle up, because this thing is going to swing like a pendulum from green to red, red to green, and then now soon, if we pass -50, back from green to red. And a move of green to red is obviously can be a very massive move. Our measured move is up to $45. Again, we're at only $15 and some change. So, and you can see a 374% move if we get up to $112, $86 ish. So 3 to 4x rising up to what I believe is fair value. So as you can see, things are all looking very, very good on the monthly chart. Things are really starting to line up. If we go down to the weekly chart, it's the same thing, guys. We have this beautiful falling wedge. We broke out, we retested, we're now bouncing, and this has a measured move of itself to $28. So short term, I see 23. Couple months, I can see 28 again, as long as the markets stay good. And then on a monthly, longer term, by end of year, first half of next year, I could really see us getting into the obviously 20s, 30s, and then maybe even up to our $45 measured move.